Hi, everyone. Welcome to another Dolphin Financial Radio Show with me, Dan Wendell. Today's topic is about Social Security and taxes. We're going to talk about how Social Security is taxed. Is it taxed? If it is that double tax? We're going to answer that question too about whether or not Social Security is a double tax. And a lot of people don't realize it is tax. And that one of those people that didn't realize it originally is my co-host Tony Shore. There he is, getting his camera ready. Tony
Yes,
Shore, do you know that Social Security is taxable? A lot of people didn't realize that.
I didn't before I started working with you, Dan. I will admit that, but I've known for about the past 9 years that
I know that. Hey, check a look at my background for the YouTube watchers. You could see I have a sample SSA 1099. You know what a 1099 is, Tony, right? You get them
Oh,
at the
yeah.
beginning of the
Yep,
year, theoretically.
yep,
Says how much money you got from somewhere. Social
yep.
Security sends out a 1099. Now, why would they send out a 1099?
Mm,
Because they want you to report it to the IRS so that the IRS can then say, "Give me some money."
because we have to
Some
pay
money.
taxes on our Social Security in some cases.
That's what we do. Indeed. Not everyone. Some people pay taxes on their Social Security, Tony. Not everyone.
Hmm. Why is that? That doesn't seem fair.
What, taxes in general or the fact that
Yeah,
some people
yeah.
pay more than others? Did you just say fair
Right.
tax? Are you promoting a fair tax? Because now we're
Uh,
talking my language, Tony. No?
yeah,
No.
well, yeah, fair if you look at all aspects.
Okay.
I'm all
All
for
right.
fair tax. Yeah,
Social Security does have a tax, and it is a progressive tax. So some people pay more, some people pay nothing, some people
sure.
max out. Let's talk about it today. And then I want to answer the question that a lot of people say when they talk about Social Security. Didn't I pay taxes on Social Security already? That's a double tax. And I'm going to talk about that specifically too. I do want to mention Minnesota is going to come into play here.
Uh-oh.
What? What?
Yeah. When you're talking about taxes, it doesn't surprise me that Minnesota could come into the conversation, trust me.
Florida. Okay, let's talk about taxes on Social Security. Who pays taxes on Social Security, Tony? It depends upon your combined income. You
Of course.
notice to the viewers, I have combined income in air quotes. What is combined income? I'm not talking about Tony, you and your wife combined income. I have a
Oh, I thought you
different.
were talking about the combined you and your spouse. No?
Nope. This is
Oh, okay.
combined income. This is a Social Security IRS made up word or term, and I'm going to explain what it is. And don't get your eyes glazing over, Tony, because there's a formula here.
Oh
I'm
boy,
showing you
look
the
at that.
formula. He's already, folks. We're losing him. We're losing him.
Wait,
He's on life
wait,
support.
are you gonna talk about formula? Wait, Dan, are you gonna talk about formulas that the government has come up with?
Yeah, he's out, folks. He's out. So let me to the people that are still with me. You may have turned off after seeing this 1099 form, but Tony's out. He's back. Here he is back. Life support now, Tony. Here we go. Your combined income. What does that mean when we're talking about Social Security? It is your adjusted gross income. So people know
Right.
that term from taxes, your
Yep.
AGI, your adjusted gross income, plus we're adding now your non-taxable interest. Wait a sec, Dan. What does that mean? Maybe you have a municipal bond. I heard municipal bonds are tax-free. I don't pay tax on my municipal bond. Maybe so, maybe not. But that non-taxable interest you got, that gets added into the formula. So you add that to your adjusted
Uh,
gross income and
sure.
you take half of your Social Security benefit and you add that in. So you
Okay.
got your adjusted gross income, your non-taxable interest that you thought was so good that you were getting not paying taxes on, and you add half of your Social Security benefit, and that becomes your combined income number. That's
Okay.
your new combined income number. So what is that? What do you do with your combined income number?
What do you
Let's
do?
just use a married couple. We'll use a married couple as an example. Their combined income number, if it's above 32,000, their Social Security benefits are going to be taxed. If it's below 32,000, if your combined income is below 32,000 as a married couple, no taxes. You don't pay taxes on your Social Security benefit.
Wait, I thought it was combined. You have written there combined income of 32,000 and 44,000.
If it's between 32 and 44, I should say
Okay.
between those 2,
Yeah,
if
yeah,
it's
okay.
between 32 and 44, then you're gonna be paying taxes on half of your Social Security benefits. So, if you're below 32,000 as a couple on your combined income, no taxes on your Social Security. You above 32 but below 44, up to half of your benefits will be taxed. It's a sliding scale going up.
Okay. So,
Once you're over 44, let's keep
okay.
the combined
Yep.
income now. We're not talking regular income. We're talking combined income that includes half of your Social Security benefit. Once that's above 44, up to 85% of your benefits are taxable.
Wow, up to 85% of your Social Security benefits can be taxable in that certain situation. Now, are we talking when you talk about taxes, you're talking about federal income tax here, though, right?
Unless you live in Minnesota, then it's
You're not
both
talking about the
federal and
state.
state.
Ah,
Yes.
yeah, I knew
Yes.
that was
I'll get
coming.
to that in a second. So
I
you
knew
get a
about that.
1099. You get a
Mhm,
1099 SSA 1099, Social Security
mhm.
Administration 1099 saying, here's what your Social Security, here's what you get, right? And you have to report that on your tax return, and you might be actually paying taxes on your Social Security. So it makes sense to understand these levels, but they're pretty low.
Yeah,
They're
they
pretty
are.
low because once you start adding half of your actual benefit in, because some people get 32,000 in Social Security benefits
Yeah,
alone.
yep,
So once you add half of that to other income and non-taxable income, all of a sudden you're like, "Wait, I'm well over that. So I'm paying taxes on my Social Security. This isn't right."
right.
Yeah. So
Yeah,
this
that
is federal tax.
shouldn't be taxable, Social Security. That
It
doesn't
wasn't
make sense.
taxable. It was not taxable. We're gonna get to that in a minute, what happened.
Okay,
But that's federal taxes.
okay.
Some states tax Social Security benefits as well. Not Florida. Not in Florida. Yeah. No state tax in Florida. Some states that have state tax do not tax Social Security. Some states tax your income, regular income, and your Social Security income. I have them listed here, and look on there, Tony. There it is. Lovely Minnesota.
Yep, yep, look at
Mhm.
that.
Now
Nebraska,
each of
Minnesota.
Yep. Connecticut, Kansas, West Virginia, Vermont, Utah. So these states actually tax Social Security benefits. I think South Dakota got rid of taxing Social Security benefits in
Well, they
2021.
don't have any state taxes, I don't believe, in South Dakota.
I think they taxed Social Security benefits though,
Yeah,
but now they don't. I think that
okay.
changed last year. So I think it's what is that, 13 states? I don't know. But each state's got their own rules. So there might be different income brackets. Some states,
Yeah,
if you make above 100,000, then they start taxing it. States like I believe Minnesota use the same brackets as the federal level.
yep,
So
they do.
something to consider. Now, this surprises many people. I pay taxes already,
Right,
and now I'm getting it. It was supposed to be tax free. FDR's rolling around in his grave. This is not fair. I don't want to pay taxes on Social Security.
right.
It's a double tax. I've already paid taxes. Why am I paying taxes again? That's the big thing.
That that's my question. Yeah, that's what I'm saying.
Is it a double tax, Tony? You think it is?
Well, it seems like it.
You could say it's not because you're putting into Social Security to pay for the people that are claiming it while you're working. And then when you go on Social Security, other people are paying for it. So it's not really your money paying for it, it's other people's money, the workers. So it's not your own money that was taxed already. But we all know that that's not true. So here's the deal. Here's
Yeah,
here's
exactly. I thought
here's
you
what
were gonna
happens.
try to convince me of that. Come on.
Well, the other thing is not all of so your money puts in the Social Security Trust Fund,
Mhm.
it makes interest, right? Remember
Right.
we did a show on that. I'll put that up here.
Yep.
How we're running out, but it's because this 2021 marked the year we flipped, where we're actually taking more out than it's growing. Part of the growth is interest that the Social Security Fund has been getting.
Sure.
Hey, that's not your money, that's interest. You should pay tax on it, right? But let's be real. We weren't paying taxes to begin with. Why are we paying taxes now? What happened? And to figure that out, I want to go back to the old Gipper. The old Gipper. Let me see if I could share my screen here and
The
share this
Gipper.
video. I want you to watch this video of the Gipper. This is 1983. Ronald Reagan talking about the recent amendment that changed Social Security.
And my fellow Americans, I think we've gotten a very great deal. A tumultuous debate about Social Security has raged for more than 2 decades in this country, but there has been one point that has won universal agreement. The Social Security system must be preserved. And rescuing the system has meant re examining its original intent, purposes, and practical limits. The amendments embodied in this legislation recognize that Social Security cannot do as much for us as we might have hoped when the trust funds were overflowing. Time and again, benefits were increased far beyond the taxes and wages that were supposed to support them. In this compromise, we have struck the best possible balance between the taxes we pay and the benefits paid back. Any more in taxes would be an unfair burden on working Americans and could seriously weaken our economy. Any less would threaten the commitment already made to this generation of retirees and to their children. We're entering an age when average Americans will live longer and live more productive lives.
So, we're talking about the tipping point. So,
Mhm.
the Gipper said, hey, we can't tax them anyone anymore. It's not fair, but we can't cut the benefits. That's not fair. So, we got to change the system. So, this is the point where the Congress came up with the amendment in 1983 that said up to one half of the Social Security benefits will be taxable. That's where that income bracket came in. So going
Yep.
back to the married couple, once you make above 32,000, that's when half of your benefits will be taxable. That number was made then, and that number still exists today. That hasn't been
Wow.
increased with inflation.
Mm.
So it seemed like a lot at the time, but now 32,000 isn't what it was in the 83.
No.
But here's the big point of this, Tony. The logic. When people put in Social Security taxes, part of it, half, is coming from the employer. Okay? We know that. You might pay, let's just call it 6% in Social Security tax. Your employer is chipping in 6% as well.
Mhm.
Okay?
Yep. Yep.
They are writing that off as a business expense. So they are theoretically not paying taxes on that. So no one paid taxes on their portion.
Ah, okay.
When you get it, what Reagan and Congress said at that time was, well, we know that you at least half of it you didn't pay taxes on. No one did. So when you get almost half, when you get half, you should pay taxes on it.
Ah, that was their
So,
way of justifying it. They
mhm,
always find
that's
a
how they
way to
justified it.
justify,
To their defense,
taxing.
I agree. I agree. I think that you didn't pay taxes on it, so getting the money and then paying taxes on it can be justified. I'm not saying it's great. I'm thinking it's better if it's tax free, but I could
Sure.
see their logic,
Yep.
right?
Yep.
But then what? How come 85% is taxable? That's wait. Wait,
Yeah, I was
what's
just
with the
gonna
other
ask that.
35%?
Yeah,
Yeah,
it
we need
didn't
to fast
stay
forward.
at 50.
But
More
you
can be
see,
taxed.
do you see the logic? How half of it was never no taxes were paid on it. So
Yep.
theoretically, you're getting the piece, half of your benefits from your employer. You see how that can be said?
Well I see how they're justifying it with that argument,
You
sure.
may not agree, right?
Yeah.
So I'm not going to beat them up over that too badly. But then here we go again. 1993, just 10 years later, who was president? President Clinton at that time. New legislation in 1983.
Hmm,
This is the legislation that changed it from half of your benefits are
okay.
taxable to 85%, up to 85% of Social Security benefits are taxable.
Ah,
What happened here is they, I'll tell you the logic in a minute, but this was part of the omnibus bill that was split down the middle in Congress. It was dead. They needed a tie-breaking vote, and tie-breaker vote goes to
the
in our
vice
country?
president. The
Vice
vice
President Al
president.
Gore. He said, "Let's do it." He passed the omnibus bill, and in that was this legislation about Social Security that said we're going to not cap it at 50%. We're going to cap it at 85. How is that fair? The logic was, hey, 50% was never taxed, so you should pay taxes on it. What about this 85%? Half of it was your own money, already taxed. Why?
Yep.
Here's the logic. When you get Social Security, what they did, they had math. They did math, and you could still do the math today, and it's about right. When you look at what you get back from Social Security, you're getting back more than you put in. You're getting back more than you put in. The amount you get
Yeah.
back equates to about 15% of what you put in. 15% of it is what you put in. So their logic here is, yeah, the company put in 50%, but we're giving you so much more. We're giving you another 35% you never put in. So tax. Ba-boom. We're taxing you on it.
So basically, what I find funny is the political aspect of this, and that's that you have the beloved presidents on each side of the fence. Reagan, really stalwart, beloved Republican leader, doing it, made tax Social Security taxable, and then you have the beloved Democratic president that Democrats loved, Bill Clinton, said he did such a great job. Republicans really point to the job Reagan did. Democrats point to the job that Bill Clinton did when he was in office. And those are the two guys that actually taxed Social Security.
Right?
That's fun. Those are the administrations, I should say. It's kind of funny. You know what I
It's
mean?
funny, right? It's apolitical, right? But
Yeah.
the problem is because the problem of Social Security, the benefit system, how it's designed, it was it's it doesn't matter who the president is, it's crumbling. It's
Right.
stressed because people are living longer. Democrats and Republicans are living
That
longer.
puts a big burden on the Social
Right.
Security
Right.
system, people living
Right.
longer. Yeah.
Exactly. So instead of raising the limits on how much is taxed, reducing benefits, increasing tax rates, no, they say let's just tax what you're getting because you're getting such a good deal. You might as well pay taxes on it. And if you do the math to their defense, yeah, you do get more than you put out when you put
Sure.
in. But you get out more than you put in if you're at the lower level. If you're at the high earner, you're definitely not getting out as much
Yeah.
as everyone else is relative to what you put in. So
Sure.
this disproportionately favors the lower income people, and who's against that? Rich people, right? So
Right.
that's why this passed. So
Yeah.
if you look at it, yeah, many people are getting a lot out of it that they didn't put in, especially someone that gets disabled at an early age. They didn't
Mm.
put anything in really, but
Yeah.
they're getting
Yeah.
it. That's the whole point of it, though. It's a safety net. It's not designed to be a pension that you live off of for the rest of your life. It's
Right.
designed to help you in a time of need. And so I see the logic here as well.
Sure.
I don't like taxes, Tony. I would rather this be tax free, make my
Yeah.
job easier as a retirement income planner, but I see what they did and why they're doing it, and they can make the case that, well, it's not a double tax because some of this is not something you never paid taxes on.
Well, sure, they have to do a little unnatural bending and twisting to get to the point where they justify it, like you're saying, but
Yeah, which is rare for politicians to do. Uh,
yeah.
so I thought that
Oh
would be
man.
an interesting way to look at this because a lot of people see it as a double tax, and that's just the way it's going to be. And I
Okay.
think most people fall in that camp. Most people just assume, hey, I already paid taxes on Social Security. Why am I getting taxed again? But when you
Yeah.
look deeper and you look at the actual formulas and the numbers, it kind of evens out. You're not getting anything free, you're
Right.
getting taxed on it. And
Yeah.
so the case shouldn't be, well, it's a double tax. The case should be, well, fine, but I don't think we should have taxes on Social Security anyway.
Right. Yeah,
Then,
and especially in retirement because as you've mentioned on previous shows, Dan, and really for our listeners, the key I would think is we're talking about taxes in retirement, right? I mean, that's when you get
Right,
Social Security. And so
right.
taxes in retirement in general, people assume they're going to be low. People assume there's no tax on Social Security. When they stop working, their tax burden is going to drop really low. So they're not thinking about it. But what they don't realize is their income in retirement, they have to have income. And where does it come from? These tax deferred accounts, mainly like
Yes.
traditional IRAs and 401ks, which you have to pay full taxes on when you pull that money out. And then if they're going to tax your Social Security as well, that's tough. That's a big tax burden that, when you're trying to live on a retirement income plan or fixed income, that's tough.
It is tough, and you think back, I'll put it back up, the levels for a married couple, to get above 44,000 isn't hard anymore. I mean, that used to be
Well,
something you
no,
can work with in the '80s and '90s.
sure.
Hey, all right,
Yeah.
maybe I'll withhold and do some tax strategies. Now, today, people like, if I have $44,000, that's just basic living expenses. That's not rich. I shouldn't be at the top tax bracket for Social Security. So
Right.
they may want to adjust those levels, but you got to remember, if they raise that, then less people will be paying taxes on their Social Security. That money gets pumped right back into Social Security to fund Social Security. So you're
Yeah.
basically taking away from the pool by reducing the tax burden on people.
Well, but wait, what you just said though, wait a minute, Dan. If it works, especially like I know state and local government works, um, when they say we're going to tax something like Social Security, your point, it would be great if I knew, hey, that money's going back into the Social Security pool that I'm paying on Social Security to build it up, and I know that's the intention. But do I personally know that's actually happening? Like when I pay my taxes, how much of that just goes into some general fund that ends up getting, wasted to build, to give a tax break to some senator's buddy's company in his home state. You know what I mean? That's what I worry about in the back of my mind. I realize they're going to say, "Oh no, 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 no. This money goes to where it's supposed to." But
It
I know a lot of times, like the general fund for the state of Minnesota, where if something's taxed and it goes into the general fund, it's gone. Right? That's like
it was
it's like
gone 10 years ago.
it's like when I pull cash out of a it's like when you carry around cash. If you
Gone.
if I have $200 of cash in my pocket, I don't have $200 of cash. That's
No.
gone. You write that off. That's not going to be dedicated to a really good need.
Well, you make a good point, Tony, and it reminds me of the joke or the analogy. If I told you that I have a dog and his tail is a leg, how many legs does he have? He has 4.
5.
He's got
He
4.
still he still
He's
has
still got
4.
4. I could tell you his tail's a leg,
Yeah,
but it's
that's
not a
right.
leg. It's a
That's
tail,
right.
right?
That's
So
right.
I could
Yeah.
tell you that we're not taking the money out of Social Security. It's staying in the fund. It's staying in the family, and it's separate. Where it has nothing to do with the debt, and I think Ronald Reagan famously said, "The Social Security has nothing to do with national debt." Mitch McConnell will say the opposite. Like, it's funny, right? But
Right.
we all know, yes, that money's over there. It's supposed to be there, and it's supposed to be for that, and
Mhm.
we have blinders on. We're
Yeah.
neutral. When we're creating the new budget, we're not thinking about that money over there, but
It's
they
in a
are. We
lockbox.
know it. Yeah, yeah. We know the truth, right?
Lockbox.
So when it comes to the states, like Minnesota taxing it, that's a whole nother story. You're right. Like, who's getting that? That's not going back to the federal trust fund for Social Security. That's going
No.
right into the
Yeah. Yeah,
you
who knows
r
where that's
potholes,
going.
theoretically.
Yeah.
Okay, so conclusion, Tony. Social Security is taxed. Surprise, surprise. For a lot of people, they don't realize that until they start getting it. They're like, "What?
Yeah.
Wait a sec. They tax Social Security. Wait, they take money out from my Medicare. They take $170 out a month from my Medicare. Do I pay tax on that, or is that calculate? No, that's in the formula, taxed, then you get the 170. It's like, "What?"
No.
Right?
Oh,
Yeah.
that's
Um,
not good.
it's not really a double tax. I don't see it that way. You can make the case. I'm not gonna argue. I mean,
Sure.
who cares, right? But it helps to know the formula. It helps to know those levels, and it helps to know
Mhm.
what you need to do to, because maybe you start putting into a Roth. Maybe you figure out ways to get tax-free income so that
Yeah.
your tax burden doesn't increase. And the biggie, Tony, might involve avoiding certain states when it comes to retiring.
Yes. Yep, it's true. There are retirement-friendly states, and we've talked about that. We should do another show on that, like, where are the best places to retire? So
Mhm, mhm. I'm gonna end that there, Tony. Here's a little, blurb on the bottom. I will say this, and I have to be clear, I do not work for Social Security, neither does Tony. We don't represent any government agency, and we don't give tax advice. This isn't a show about tax advice. We're not telling you what to do. So don't do anything, make any tax decisions based on what we say. Go see a CPA. All right, Tony, great show. I hope you enjoy the rest of your day. Thanks for dealing with another show on Social Security. I mean, you got to be saying to yourself, what did I get into here?
oh, there are a lot of important aspects of Social Security, obviously, that people need to know about.
Yeah, and I take it serious. I know a lot about it. We're doing seminars on it all the time.
Sure.
But I just wanted to address this issue about Social Security and taxation. Hopefully,
Here's
everyone
another
learned a little bit.
truth. Social Security is dying.
Have a good day, everybody.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.